Hi everyone. In this video, I will introduce you to corporate issuers. Now, corporate issuers has a weightage of 6 to 9% on your exam, which means you can expect around 13 questions in session 1 of your exam. Now, corporate issuers has 7 learning modules. Module 1 is about organizational forms, corporate issuer features, and ownership. Expect one question from here. Module 2 is about investors and other stakeholders. Expect one question. Module 3 is a theoretical topic on corporate governance. Expect one question. The core of corporate issuers is in module 4, 5, and 6. Expect 2 to 3 questions from working capital, 2 to 3 questions from capital investments, around 5 questions from capital structure. This is the most critical topic, and a question from business model. What really are we speaking about in this topic of corporate issuers? Corporate issuers historically was named as corporate finance. Here, we are talking about financial matters of the corporation, which is dealt by the CFO of the company. The CFO of the company is responsible to manage the balance sheet of the firm. If we take a look at a high level balance, on one side, the CFO is responsible for sourcing the funds. The source of funds come from liabilities and equity. So the CFO can raise debt or he can take owner's money. CFO can also arrange for short-term financing, which we call it as current liabilities. This could be in the form of trade credit from the suppliers, which we call it as accounts payable. Then the CFO can raise long-term debt, which we will now call it as non-current liabilities. And the rest of it can come from equity, which is owner's money. With the help of these funds, he is going to use the funds and create assets. Assets are, we say, uses of funds. The assets which give benefit in short term or can be converted to cash faster, those are called as current assets. And the long term assets are called as non-current assets like land, property, plant, equipment, intangible assets. These are all long-term assets. Now, in corporate issuers, what are we really talking about is the CFO's response to individual items within the balance sheet. Now, the first thing that the CFO needs to manage is day-to-day operations, and that will create a need for managing the working capital. Working capital is managing your short-term assets in such a way that we have enough of it to pay off the current liabilities. Module 4, which deals with this management of working capital. So, managing current assets to pay off the current liabilities is a discussion on working capital management in module 4. The other job of the CFO is to raise funds through debt and equity. Now, how much debt, how much equity? This decision of how much debt and how much equity, this decision is discussed in module 6, capital structure. Now, once he has sourced the funds, the CFO also needs to decide which long-term projects should the company do. When they do these long-term projects, non-current assets are created. So this discussion on which long-term project company should do, this is discussed in module 5, which is capital investments. This chapter talks about which long-term projects should the company do. Now, The idea here is that the capital structure topic will speak about the fact that if I raise money from debt or if I raise money from equity, the investors have a required rate of return in their mind. For them, it's the required rate of return, but from the company's perspective, it is the cost. The CFO is trying to raise this debt and equity in such a way that it is able to minimize this cost. And on the other hand, he wants to invest this money in long term projects, which generates returns. So he wants to maximize the returns. So this is what the CFO is trying to manage. And this forms the core part of your corporate issuers topic. Module 4, 5, and 6. The rest of the topics, like module 1, speaks about the different form of organization. So there is proprietorship, there is partnership, there is corporation. Then module 2 talks about the different kind of investors, the different kind of stakeholders, anyone who is associated with the firm. Module 3 speaks about the importance of corporate governance to reflect a core point, which is that the managers managing the company are different from the owners of the company. And these managers need to act in the interest of the shareholders. How to ensure that managers are acting in the interest of the shareholders is something that is discussed in module 3. Now, because shareholders need this surety, they hire board of directors who will keep an oversight on the management. This discussion we will have in module 3. And the last module, module 7, is all about understanding different kind of business models. That is how different companies make money. A lot of examples on real life companies will be discussed in this chapter of business models. So you are expecting 13 questions. The most important readings are module 4, 5, and 6. I will see you in the next video where we will start with module